Hi everyone, uh, welcome back to my back testing. So, I'm following uh, this particular step by step for my back testing strategy. It's not like a strategy, I'd say, uh, learning more about what happens in the price action, uh, how does liquidity work, how does the institutions uh, see price, see price and what they look for. So that's what we don't want to be a retail trader. Uh, we just look mm, uh, to become more like an institutional trader and like a mechanical trader, I'd say. Okay, I think you can see my screen. So just remember these six. I'll repeat it for you. First thing is we determine the higher time frame base bias. We use daily and 4-hour chart uh, to mark all the highs and lows, daily highs and lows, and mark the session ranges like Asian, and we look for maybe entries or order blocks or fair value gaps, and uh, see for liquidity sweeps. So it's as we use ICT strategy, we look for more of which is AMD, which is accumulation, manipulation, distribution. That's what we look for. Uh, Definitely identify equal highs and lows, because that's where all the sell side and buy side liquidity, which is buy stops and sell stops orders will be placed, and label buy side or sell side liquidity. And so as important, first, when you're learning, do not trade yet, just watch. Okay, so let's jump on to higher time frame bias. I have it right here. So basically ignore all of this all of this, because this is the price action. We don't want to consider that. So look over here first. So we have equal highs here, equal lows here, and equal lows here, and here I'll draw this one again for you for clarity. So I just want to say okay, let me finish this first. I'll just forward. So first things first, let us draw the path. I have it like here. So it the mark it consolidated on a daily time frame between these equal highs and lows, but it failed, and it went to make up this high here and hit this low. I again tried to pierce through that, but it failed, and right now we are at this. So I don't want to mess this price action. I want to keep the chart clean. So this is a bearish bias, and just keep it like that, and I'm ending the path here. Okay, so we discussed Jan 2nd, which is Friday. So Saturday, Sunday markets are closed, so we open with Monday 5th Jan. Okay, so as usual, first as usual, we determine the higher time frame as bearish on daily. We'll go to 4 hour charts as well. First, we let us mark the previous day's high and low. Okay, let's keep this like this. Now sometimes you might see ChatGPT I use probably for some ideas if I'm left over somewhere. Okay, so this is the previous Friday. So this is previous day high, and copy paste. Sorry, previous day's low is pretty much equal to the equal lows here, so keep that in mind. Okay, so let's jump on to 4 hour time frame right here. So previous day high and low. So this is it opened on Sunday, right? here. It opened below the previous low. I'd say pretty much equal to the previous low. It went down. So let's also mark the swing high and swing low as well. So for that, we use just this. Let me just find the curve. So this is our swing low, and this is our swing high. Okay, so sell stops accumulate below this and buy stops above this. Okay, let's keep it like this. Now we're in a bearish bias, so let's jump on to 15 minutes. I already pinned it this, so that'll be easier for us. So don't just I'm trying to keep my charts clean as much as possible, but as I'm currently learning, so don't mind. Okay, what we want to do is, so this is Sunday open here. I also just for your just for letting you know, I also mark my Sunday open, because that will definitely decide what's going to happen all throughout the week. So what I like to do is I drag it all to the coming Friday, which is the end of the week, right? So let me just try to change the color, because it's change it to yellow. This is basically the opening price. So I'm definitely expecting to go, going towards the week, I'm expecting it to go below this. So first 2 days or first 3 days before Wednesday, I'm expecting it to make that Judah swing, take out all the liquidity below and upward, and where institutions collect all the bulk orders, and it will have that bearish bias which we already had on daily and 4-hour time frame. So if you see it, see here, it opened here. It went to take out the liquidity below this low. Okay, this is the previous day low, and this is the equal low. So so just remember that Jan 5th was Monday. So Monday often like sets that narrative, maybe the initial balance for the entire trading week. So okay, so on basically just remember on daily we are not looking for entries. You're just looking for the drawdown on draw on liquidity, which we call DOL. We just try to remember that market structure, the nearest previous days highs and lows, etc. And basically it sets the weekly narrative. Okay, right now we're on 15 minutes here. So it opened here. If you see, it fell through the this is Asian range high and low. Okay, I'll just remove this, it's more clumsier. I'll keep these. Now let's add ICT zones as well, and I'll try to close these sessions. So it's easier for us now. So in this Asian, it made a high here, low here. So this is the range. This is the Asian range. So once that is done, I am expecting London to. So just remember. So let me help you with this. So let me try to draw it here. Let's think this as Asian. Okay, Asian range. So if price try to consolidate like this, let's say this is Asian. Oh, I'm sorry. Sorry. Okay, it's consolidating like this. Okay, there comes. So next comes London. Let's say this is London. What I'll do is just to move it below for our easy convenience. There is a New York overlap as well. So let me draw New York too. Okay. So if this is Asian zone, sorry, I'm expect. So there is buy stops above this and sell stops above this. So I'm expecting in a bearish condition. Let's say expecting it to first take out this sell side. I'm expecting London to make higher high or higher low. It can be either of it, but in case of bearish conditions, let's say because in bearish we move to like higher highs, we make lower highs and lower lows. So lower low, lower high, lower low, lower high, lower low. Again, this is the bearish condition, right? So that's bearish market, right? So I'm expecting this to make. So just remember, price market is always fractal. So whatever happens in the lower time frames will be shown on the upper time frame. So I guess this is gonna be a long video, but bear with me. So in this case, I'm expecting it to make and probably go on to make retrace back, and this is not this. I'm not predicting the price, but I'm expecting it to happen like this because these kill zones are highly active, and maybe towards this it goes, and towards the London close I'm expecting it to retrace a little because they try to take the profits out and maybe consolidate or however market moves in a New York PM session. So just remember this. So this is Asian range, right? It made a new low, and towards the, let me help you with this first. Let me just do this. So this is the Asian range. This is the buy stops, and below this are the sell stops. So if you see what the price did, I mean what the institution did. So once it was consolidated, it went down to take out this liquidity below this Asian low. This Asian low, right? Let me just line above, so I don't want to mess it up. Or I can do one thing. I'll just extend this Asian range. So this is Asian range, and I just took out that sell side liquidity, and it rallied up to take out that buy side liquidity as well, and it continued towards the next session. Okay, I'll try to cover that one as well today. So I'll just, if you have already understood, most of them know this, so I don't want to keep this open, and this one as well. So we'll try to find order blocks and fair value gaps in this current scenario, like the Sunday and Monday. So definitely we see a fair value gap here. It will be easier for us to, for you as well to, so yeah, there is a fair value gap in between these, because if you see here, there's definitely a gap between the first candle and third candle. I don't want to draw wrong, and so that's why I'm using the technical indicator, so don't judge me for that. And there is definitely, after the London Open, there's a fair value gap here as well, which is taken out as, and there is a fair value gap here too, because this is a very strong move. So between the first and sorry, this is definitely a big gap, which later price tapped into and rallied all the way to the bottom. Okay, so whenever this forms, you see equal highs, sorry, equal lows. So they try to place shorts here. They sell shorts, thinking that market will go down, and they'll place all the stops. So it will just hit all the stops, take out all the. This candle definitely is a high momentum candle. And what's this? We see it consolidated. Yeah, you can definitely see here. So this is accumulation stage. So one thinks it might short. So what it did, it manipulated and distribution towards upside. Okay, so here it is already mentioned, this is a fair value gap here, strong momentum. That's definitely institutional footprint in the New York AM session. And towards this is probably the London close, so they took out some, let me show it to you. So here they went on to consolidate towards the New York PM session, and next day opens. Let's discuss this one as well. So first we try to identify daily bias. Okay, this is the fifth we discussed, and I mark previous day high, previous day low. Okay, so I'm seeing it as bearish. It is trying to retest this equal low and potentially looking for the buy orders, and then I'm expecting it to go down. So let me go to 4 hour as well. So previous day high and previous low is marked. I'm moving it to here. Okay, we are dealing with the equal lows here. We've seen now. So 5th is done and we're going on to the 6th, right? So the buy is bearish as usual, and let's go to this part of see if we are have any equal highs and lows. We see some buy side liquidity above this high, which is BSL, and yeah, let me just clean it up a little. Sell side liquidity here, sell side liquidity. Okay, this is the previous day high right at this point, and the previous day low right at this point, and bias is definitely bearish. So into the Tokyo session, Tuesday, and before the London session Wednesday, we expect to, in a bearish scenario, we expect it to make that lower high, and rest of the week we expect it to fall it down. I mean, look for bearish scenario. So Tuesday it went on to an higher high, sorry, lower high above this. So it took out this buy side liquidity here, 20 pips, 20 to 30 pips. So it went to hunt this buy side liquidity, and once the London open, so this is the Asian range, and opening of London, it went to hunt that, and it fell throughout the session, if you see, or we can frame it like this: it hunt the liquidity, and it let's do this. So accumulation, manipulation, distribution, okay, towards the London, right? And if you can see here, consolidated towards the New York open, manipulation, if you see, accumulation here, all what retailers, I mean, retail players think that it is going down, so we short it, we sell short, so it triggered their orders, manipulated, and distributed again, right? So that's how institutional orders think, as per my understanding. I'm learning so far, so we'll discuss it more towards the next videos. So for now, see if we find any order blocks. So if you see here, we find an order block here. It is already framed, so we don't have to think much. This is the low, which is framed by this high. This is an order block. It tapped into the order block. It ran towards. So we can also, when it is like manipulated, we can take an entry. For better entries, we can also move to lower time frame charts. Let me finish. Okay, let's finish this as early as possible. So let's drop to 5 minutes. I don't have 5-minute access because I don't have a TradingView Premium. So sorry about that. So what we're discussing. So here right now. So this is the low we'll be targeting the price to get to. So you can find a better entry if you drop to 5 minutes or 1 minute. 1 minute I don't prefer, probably I'll definitely look for 5 minutes. So let's see if you sell it here with your stop loss above this high, and we expect it to target these lows here. That's a 3 to 1 risk reward ratio. So it created an order block here. Yeah, basically, yeah, we can also, I mean, I forgot to, from next videos on, I'll throw this. So it made higher high, higher low, higher high, higher low. This is the, which is a strong low, which shouldn't be broken. If it is broken, it's like breaking the market structure, which is a change of character. So we can look for an information entry once this is broken on 15 minutes. Maybe in 5 minutes you can find a better trading opportunity, I mean entry opportunity.